All right. So let's quickly solve this second illustration. And that will be like our cap on capital allowance. Can you see my screen? Confirm that you can see my screen.
No, we
can't see your screen.
Okay,
Yeah, we
it's
can.
up now.
Okay, good.
Okay, yes, we can now.
That's fine. So let's just quickly trash out. You can see my full screen, the Excel and the other one. The Excel and the Word document.
No, just the Word document.
You can't see the Excel.
No, sir.
All right, no problem. How about now?
Yes.
Yes, we can.
Yeah.
Okay, thank you. So can you please, can a female as usual read this for us?
Okay. John Bull Nigeria Limited, a manufacturing company, commenced business on August 1st, 2020, and
Okay.
prepared accounts on July 31st of every month for the purpose of business. It incurred qualifying
No,
capital
we said
expenditure
the
as
first thing.
follows.
Sorry to cut in. We said the first thing you should do is to give us the heading. I mean the requirement. The requirement guides you on what you need from the question. So
Sorry.
the first thing you should do is to check in the requirement. So
Okay.
what's the requirement? The requirement is compute capital allowances of Jumbo Nigeria Limited for the first 5 years of assessment. So I will say computation of capital allowances for, I don't know the years of assessment yet, so I will come. We said in the last class, there are 4 things you are required to do basically to determine your capital allowance. The first thing will be for you to determine what? The basis period for assessable profit, right? Do you remember? Hello? Am I alone?
No, you're not. Yes, we remember.
Hello, sir.
So
We remember.
you said the first thing is determine the basis period of assessable profit, right?
Yes.
The second thing is you determine
Yes.
the basis period of a capital allowance, Abi. You remember? And the last
Yes.
thing, what you allocation of QC, Abi. Do you remember? So I want to do the 3 steps together at once. So we have YOA, that's year of assessment, basis period. Are you with me? Of assessable profit. We have basis period for capital allowance. Then we have here allocation of QC, Abi. All right. Now, let's now check the question to know what's going on. No volume. I think it should be from your end. Please confirm if you all can hear me.
Yes, sir.
All right. Jumbo Nigeria Limited, the manufacturer, commenced business on August 1, 2020 and prepares accounts to July 31 every year, right? So what this suggests to me is this is a commencement question, right? So in determination, commencement rule applies. In determination of basis period, commencement rule applies. Do you remember? Hello.
Yes.
Now,
Yes,
Yes,
sir.
sir.
good. If commencement rule does apply, we said for the first day of assessment, the basis period shall be from the date of commencement, and that's 1st of August, Abby,
Commencement. Yes,
2020,
sir.
to the accounting year end. And the accounting year is 31
Yeah.
7 2021,
So,
right? And we said it must be on preceding year
yes.
basis. So the preceding year basis is what? 2022 year of assessment. Right.
You're right.
Then, sorry, 2022 year of assessment. Then you start a day after the previous year. That's 1st of August 2021, right? And end it in the next accounting year,
Yes.
31 7. Please mute your mic. Mute your mic. If your background is noisy and you are not contributing, mute your mic. Then the next thing we have, we'll start again from there. We have 31. Sorry, a day after, that's 1/8/2022 to 31/7/2023. Then we'll move on 1/8/2023, right, to 31/7/2024. Then we'll do 1/8/2024, right, to 31/7/2025. How many years that means to do 5 years? But 2025. 5 years complete, yes. So all on preceding year basis to be 2023 year of assessment, 2024 year of assessment, 2025 year of assessment, 2026 year of assessment. Is that correct? Is that clear to you? Any
Yes, it is.
question from this?
Yes, sir. You made a mistake on the last one.
Okay, 31/7. Thank you.
Okay, 31.
It's typographical or be writographical. Okay, I'm typing.
You understand?
Typographical. All right. We said basis period for capital allowance should not be different from basis period for accessible profit, only that there should be no gap or overlapping in the basis period. So we also apply the same rule here from the date the accessible profit basis period commences. So 1/8/2020 to the to the year the basis period ends, that's 31/7/2021. Beginning from here,
Please
you
copy
start.
and paste it.
I didn't get you.
Copy and paste everything.
Okay, your head did it, Jerry.
They are the same now. Let's just move ahead.
Yeah. All right. Thank you. Thanks to Finance Act. All right. Then the next thing is we start to allocate the QC, right? So we'll check the year in which the asset is purchased and where does it fall in the basis period, right? So July 1, we said asset purchased before the date of commencement shall be deemed to be purchased on the day of commencement. So we have plant and equipment.
Commencement.
The next asset we have is motor vehicle. Motor vehicle was purchased on 31st October 2020. 31st of October 2020 is here. So we have motor vehicle.
Plant and equipment.
Yeah, we have factory building. Factory building was purchased December 13, 2020. Also still here. So we have factory building. Also, motor vehicle was purchased October 15, 2021. And so we have motor vehicle. Plant and equipment was purchased November 1, 2021. November 2021 is before July 31st. So we have plant, and equipment. Am I alone?
No, sir.
No.
No, sir.
The
We
first
don't,
additional
sir. We are
information.
rotating.
Part of equipment bought 200,000 July 2020 was disposed December 31, 2024. So I want to check where December is in 2026 year of assessment, right? It's somewhere around this basis period. So I have equipment disposal, right? And then the examiner also said that motor vehicle bought 300,000 in 2020 was sold on December 31, 2023 to December 31, 2023, somewhere around here, right? So I have motor vehicle disposal. Is it clear to everyone? Is it clear?
Hello?
Is the allocation? Hello?
It's clear, but must we do it like this when we are writing exam? Can't we just go straight to the and just compute?
If you are capable of doing it without allocating, you are good now.
Okay.
But I'm not sure you will be able to do it comfortably if you don't go through this process. Like I said, we sabi this thing pass ourselves, no be younger. But it's just good to allocate this so that it will be clear, so you know when you want to put it. So now we have plants and equipment.
My computation.
What do you say?
Might be time consuming because the time they will give us is not always enough, and the question is voluminous, so there's nothing you will do, like just dabble into it.
If you dabble into it, you may be forced to dabble out. So just take your time and do. I prefer doing the workings first. Number one is invariably it makes your work faster. If you've done the initial things you're supposed to do, it makes your work faster than if you're just trying to pick it haphazardly. Right? All right. Are you together?
Sorry.
Initial allowance is 10%, 50%, 25%. The same applies for motor vehicle, right? But here is 15%. No, factory building, you have 15% and 10%. When you get your question paper, just go to the last sheet on the question paper. You have the information there. You get the last sheet, you have information there. Cost. So, here we are doing 2022 year of assessment. Is that correct? So we have plant and equipment, motor vehicle and factory building. Is the disposal I want to illustrate here? That's why I'm doing this question. Is the disposal 500, 300, and 400. Because this is not 2024 year of assessment, I will still do investment allowance. I know we said investment allowance is once in the lifetime of the asset and does not form part of the taxing out value of the asset, right? Do you remember? Hello?
Yes.
Hello, Mama. Yes, I can
Yes,
help.
Please mute
You
your
are
mic.
welcome.
Mute
I
your
will not.
mics. Mute your
Yes.
mics.
Yeah. All right. Yes.
Never everybody mute your mic. Right? So the next thing we have is initial allowance. We said initial allowance is not prorated down to number of months in the basis period. Do you remember? So initial allowance is 50%, right? Times the cost. Are you with me?
Yes, we have to.
So I'm not doing anything very serious. Right. So the next thing I want to do is annual. If I'm too fast, please call my attention backward. But it appears like everybody understand me already. That's why I'm doing this. Right? Annual allowance is cost minus initial allowance times the annual allowance rate, right? Times the number of months in the basis period. And we said when it is commencement, you have to be careful of the number of months in the basis period, right? So what is the number of months in this basis period? August to July. How many months is that?
Months.
How many months is that? Hello.
Months. 12 months.
So 12 over 12 is 1, Abby. Is it clear to you, please? Any question? Any question?
Yes, sir.
Do you all
Yes, I have a question, sir.
Yeah, please go ahead.
We do something like investment allowance. How so?
You don't prorate investment allowance.
Okay.
Hello, sir.
Yes, sir.
But in this,
I have a question.
Please go ahead.
This investment allowance, are you with
Yes.
me?
Yes.
What if we have, sorry, just a question. What if you have an additional purchase of plant and machinery? Are we going to charge another investment allowance on that additions?
Definitely.
Even though we've already charged in the first year?
For the new asset, yes, because it's once in the lifetime of the asset. So if you have a new asset, you will still have to charge the investment allowance.
Okay, sir. Thank you, sir.
You're welcome. All right. 24 YOA.
Hello, sir.
Hello, ma. Please ask your questions once and for all.
Okay, please, why did you divide the 12 months by 12?
Because upon commencement, you might have questions that are less than 12 months. So the ideal thing is you prorate it down to number of months in the basis period. So as me, the number of months is 9 months, you would have done 9 over 12. But here, it is 12 months from August to July. That's why we did 12 over 12. All right.
hello, sir.
Hello, ma.
Hello, sir.
Yes,
I
this will be
want
the
to ask
last
a
question
question.
before we move on to the next thing. Before the next question we
Sorry,
meet.
sir. I also want to ask my own question.
I want to ask a question. You
Yes.
know, at times in companies' policy, they
Yes.
recognize assets that if we buy this asset maybe 10 days before the year end, they still take it as 1 year, while some
Yes.
companies usually prorate them.
The IES 8 estimate.
Estimate. Now, in capital allowance, does it apply?
No, it does not
I'm
apply.
I'm asking I'm asking in generalized now that
Yes,
if my
it doesn't.
company.
What we are concerned about is the number of months in the basis period, not when you
Okay.
buy the assets. If you buy assets in
Okay.
August and the accounting year is December, the question is do we have 12 months basis period? If it is 12 months, you don't prorate the annual allowance. So we are not bothered about when you buy
I
the asset,
understand now.
quote and unquote. We are bothered about how many months are there in the basis period.
Yes, sir.
I understand now. I understand. This is a federal, a government tax, and this is company policy. They
No,
are two
it doesn't
different
respect.
things.
Yeah, it doesn't respect governance policy. I mean, company's policy.
Can you hear me?
Hello,
Yes,
sir.
the
Good
last question before the next, please.
You don't
The
have a question.
TWDV, please, that line, I don't understand it.
What we just did is cost minus
TWDV.
initial allowance minus annual allowance.
What does the
Cost
TWDV
minus,
mean? Let me.
yes, that's what I'm saying. TWDV is tax written down value. TWDV is tax written down
Okay.
value. Yes.
Yes, sir. Can you hear me?
Yes, I can hear you.
Yes, sir. Sir, I don't understand that basis period, something like this. I just came to the class.
What I would advise you to do is just try to catch up with our previous video on basis period. I taught basis period as a topic already.
Can we just solve this question?
So
Then maybe
did you
subsequently we
use
can
the,
now
I want to
start
know something. I want to get something straight. Did you use the old finance act regarding
Is there anything like
this
old
period?
finance act?
I mean, before what they released the 2020 finance act. I mean,
And I'm going to use the finance act provision to solve. That's what I'm using.
okay. All right.
Just catch up with our previous videos. I will send up the link again and you will catch up with that.
Hello, sir. Good evening, sir.
Let me move on. So kindly note your question.
Okay.
I'll open the next question window question in the next couple of minutes. Do you understand? Please note up your questions now so that I won't have to pause here. Note your questions.
All right, sir.
So I will still open another question window. I just don't want it to be like it's question and answer.
All right,
Do you get what
sir.
I'm saying? I'm very sorry for that.
No problem, sir.
All right, thank
So I
you.
should be 2023 of assessment.
Yeah, 23 of assessment. Thank you. So the question will be, do you have additions? Your allocation will tell you, yes, you have additions. So you have additional motor vehicle and plant and equipment. So plant and equipment is what? 200,000, right? And then motor vehicle is 1 million. Don't forget, we said you don't total cost. You don't put total cost here. Do you remember? You don't total cost. So you have initial allowance. How much is initial allowance? So we said initial allowance is once in the lifetime of the asset. So that's the initial allowance rate times the cost, right?
Sorry, sir. Please, are we not going to charge the investment allowance on this P&E?
Oh, sorry, I have forgotten. Sorry about that. The investment allowance, sorry. The investment allowance is 10%, right?
Yes, sir.
10% times the cost of the asset. But it does not form part of the tax return value of the asset.
Yes.
So it's better I just put it like this.
Yes, sir.
So you have, is somebody getting what I'm doing?
Yes, sir.
Annual.
Sir, please come again without your initial allowance. Okay. I get it.
All right. So because of, for explanation purposes, I want to separate the old from the new. Right. So that we will get it better. And even in exam, you can do it like this. So for the old asset, are you with me? For the old asset,
Yes, sir.
all you need to do is very simple. Just now check back. Did you prorate the first initial allowance? If the answer is yes, you do tax it down value divided by the remaining useful life of the asset. But if you do not prorate it, Just go and repeat the annual allowance before. Did we prorate the first one? Yes, but it is 12 over 12, and 12 over 12 is 1. But let me show you what I'm saying for explanation purpose. You know, we said TWDV divided by N in the last class. TWDV divided by N minus 1, right? And to get your N, I just want to explain something. To get your N, it is 100 divided by the percentage. So here, the annual allowance for plant and equipment is 25%. So you have 4 years. So the asset is supposed to use 4 years, basically. So now, what you want to do now is tax down value divided by 4 minus 1. Are you with me?
Yes, sir.
If you notice, you are having the same answer as the first one.
Yes, sir.
The reason you're having the same answer is because you didn't prorate the first one. Assuming you prorated the first one, you will not have the same answer. Do you get what I'm saying?
Yes, sir.
All right. Any question? Any question?
Sorry, sir. Is it that you have opened the question and answer section?
Yes, I've opened because I'm almost done with this one.
All right, sir. Thank you so much, sir. My question is, Dari, sir. Are we allowed to write what's it called?
Hello,
All the
sir.
Hold on,
hello.
one person is going on.
Hello,
Let's
sir.
yes.
Can I continue, sir?
Yes, please continue.
All right, sir. I mean, are we allowed to write during exam? Are we allowed to write it in short, such as that TWD? That's
Yes,
written
you are
overload.
allowed. You are allowed to write it in short.
Sir, I have another question, sir.
Yes, please go ahead.
Sir, the question is that assuming the equipment was bought, let's say, in the 2024 year of assessment, that means that N minus 1 will be N minus 2, right?
No. You mean for the annual allowance? What I'm doing here is for the old asset. I've not done for the new asset.
Yes, that's what I'm saying. That if assuming we bought a new asset like 2 years after, you understand? So
It
that
doesn't have anything to do with when you buy the asset. The question is, did you prorate the first one? If the answer is yes, you do N minus 1. If the answer is no, you go as life continues. I'm not sure both of us are on the same page.
like if it was not prorated, so you just use N, just press the percentage like that.
Exactly, that's the point.
Okay. So the issue of prorating is just TWDV divided by N minus 1, and N is the percentage of the annual allowance. Am I right?
N is the number of years the asset we use.
Yes, and that would be 100 divided by the annual allowance rate.
Exactly. That's the point.
Okay, thank you.
You're welcome. Oshundele.
Sir,
Yes, ma'am.
I want you to clear up something here. On the 2022 year of assessment, the
Yes.
initial allowance was 50%, and the annual allowance you use 25% of the balance of initial allowance, which I hope maybe it will be 25% on cost, not the balance of initial allowance.
No, it is 25% on cost minus initial allowance. The formula is cost minus initial allowance times the annual allowance rate.
Okay.
Yeah.
Okay, because I felt that it should have been on
No,
cost rather
I
than
understand.
cost
I
minus.
understand your feeling, but your feeling is wrong.
Okay, thank you.
You're welcome. So let's now do the new asset. The question is, how many months are there in the basis period? It is 12 months period, right? So just do cost minus initial allowance, right? Times the annual allowance rate. All right. Are you with me?
Yes, sir.
So we have, to now get our TWDV now is cost minus initial allowance. No, sorry, beg your pardon. It will be tax return value of the previous year plus the cost plus the initial allowance plus the annual allowance. Minus the initial allowance minus annual allowance minus annual allowance of the new assets. Do you get it?
It's like you added the initial allowance.
Yes, because it was in minus already. And you know minus times plus we give you
Okay,
minus.
okay, all right, okay. Noted, sir. Thank you, sir.
It's because I'm using Excel. But the addition is to minus. All right. Do you get the gist, please?
Please hold on. I'm trying to. You say that 187.50 plus 200, Abi?
Yes,
Minus
100
minus 62.5 minus 25.
Minus 25. Yes.
Okay, thank you.
24 year of assessment now. For 24 year of assessment, are you with me?
Yes, we are.
Yes, sir.
Did anything happen? I will check my allocation of QC. Did anything happen? Nothing happened, Abi. So I will just repeat my annual allowances. So I'll just say annual allowance. Are you with me?
Hello, sir.
Hello, ma.
Sir, please have a question.
Please go ahead.
Sir, what if we bought additional assets in 2024? Are we going
You would
to
have
charge...
treated it. You would have treated it the way I treated the additional assets in 2023.
What of the investment allowance? Are we going to charge it?
Exactly.
I thought you said from 2024 year of assessment, there's no need for charging investment allowance.
Okay, this 2024 year of assessment, so you don't charge it.
Yeah, that's what I'm asking. What if we bought an asset in that 2024? Are we going to charge investment allowance?
No, you are not supposed to charge it. You are not supposed to charge it. You've answered it already.
Okay.
Do you understand? Beginning from 2024 year of assessment, we all agreed that Finance Act has scrapped out investment allowance.
Okay.
So you don't need to charge what has been scrapped. Do you get? What's happening? Are you with me? All right.
Hello, sir. Good evening, sir.
Yeah, good evening, ma'am.
Please, how did you get 37.5 annual allowance for 2024, please?
Sorry. Ezella has done something wrong for me, Jerry. You don't need to ask. Please. You got the gist that there's a mistake. Sorry, Excel has a mistake for me. All right, thank you for that donation. I did skip 23. You joined late. It's 23. All right. So the tax is
Hello, please.
Yes.
The annual allowance for 2024, it was that 87.5. Is that you come about it?
That's basically the old plus the new annual allowances. The old allowance plus the new allowance.
Hello.
Hi.
Please connect with the allocation table.
You will see it as soon as I get there now.
Okay.
I'll soon scroll there. Just hold on. Are you with me, please? Hello. Now, I will check my allocation table. Did anything happen in 2025? Yes. But what happened? Disposal. And we said when an asset is disposed, you determine the balancing charge or balancing allowance. Did you remember? Hello.
Yes, we remember.
And we said the common name for two of them is called what? balancing
Balance adjustments.
adjustment.
Sir,
Good.
sir, please scroll up again. That place that you wrote the basis and year of assessment, I just want to screenshot it. Just scroll there. I just want to screenshot, please. Yeah, just wait a minute.
This thing, you have it already. I'm going to send it to you after the class.
Yeah, thank you. Thank you. I've done it. I've done that.
As I'm updating it, if you have the sheet already, it will be updating at your end. Everybody in this class, you have access to the sheet. So now, the question says that compute the balancing charge or allowance in relation to the assets, right?
Yes.
Because it's requirement, so I will say computation. I don't know if it is balancing charge or balancing allowance. So to be safe, I will say balancing adjustments. Right. What are the assets that was disposed? Motor vehicle and equipment, right?
Yes.
So I'll say motor vehicle. Equipment total. I will say cost. Sorry. I have the rate here is
Sales value.
no, the initial allowance, annual allowance. Yes, 50%. 25%. Right. Since, are you with me?
Yes, sir.
Yes, sir.
Since investment allowance does not form part of the cost of the asset, you don't need to do investment allowance on this table. Do you get? Because the major issue here is just to determine the profit or loss on disposal, which we call balancing charge or balancing allowance. So you don't need to put investment allowance there. If you put it there, then nobody's going to penalize you. But I'm only saying it's not necessary. Do you get it?
Yes, sir.
Motor vehicle was bought for how much? 400,000. And then please mute your mic. Equipment is bought for 200,000, right? Initial allowance is 50% times the cost of the asset, Abi?
Yes, sir.
Yes.
Annual allowance is cost, are you with me? Minus initial allowance.
The cost is 300,000 for the motor vehicle.
Okay, sorry. Thank you for observing. All right. So we have cost minus initial allowance, right? Times annual allowance rate. Are you with me?
The sales value for that vehicle, I think, is 400.
No, now it was
Not
bought for
300.
300. Motor vehicle was bought for 300. This is what they say.
Okay, I thought it was the sales value we are talking about.
No,
All right.
not the sales value.
Okay. All right, sir.
TWDV.
It's okay.
So we say it's cost minus initial allowance minus annual allowance, Abi. Is right? Are we clear? Are we clear?
Yes, we are.
Yes, sir. Yes, sir.
Annual allowance, just repeat it.
What's your net profit now?
Right?
Sir, please scroll up as you are moving.
Yeah, I will do that. All right. Is somebody getting me?
Yes, sir, we are getting it.
So you know
Yes,
you are
sir.
repeating the annual allowance, right?
Sir, you
repeating
didn't
the
put
annual.
2023 year of assessment too.
I put
You
it,
wrote
just that I
2024.
skipped the year.
Okay.
But since you've cashed me. 2025 year of assessment. Did anything happen? 2025 year of assessment? Let me go and check carefully. 2025 motor vehicle was sold, Abby. Are you with
Yes, it was
me?
sold in 2024. Let's just say 2025. Yes.
No, you don't just say, oh, it's the allocation that determines, oh. Don't just say, oh. Do you get what I'm saying? You have to allocate it properly. If you don't allocate it
Yes, sir.
properly, there's going to be an issue. All right. So 2025, they sold an asset. Right? So we have sales proceeds. How much they sell the assets?
50,000.
50,000. No,
Motor vehicle,
vehicle was sold for 400.
400,000.
So here now you have balancing charge because the sales proceeds is higher than the tax return value, Abi.
Yes.
Balancing charge. So that's the 35 minus 400. That's tax return value minus sales proceeds. That's balancing charge. I would advise you just ignore this thing. Then the annual allowance. Yeah. Are you with me? Are you with me?
Yes, sir.
Yes, we are.
The law provides that at the final year of the asset, the tax return value shall be 10 naira, Abi. You remember that law?
Yes, sir.
So it means
Yes.
here now, you've gotten to 5, and we say you are going to get to the final year when the tax return value is the same as the annual allowance. Do you remember that?
Yes.
sir.
So it means that invariably here you have gotten to the final year of the asset. So your tax return value is here is 10 naira, but what figures are in thousand? So you have 0.010. Do you understand? So to just do this, it means here the annual allowance should be the previous annual allowance minus the new tax return value that the law says you keep. So you have 24.99. Do you get it?
Sir,
Yes,
please
sir.
come again. I get it to come again, sir. Please explain this TWDV again.
The law provides. Are you with me?
Diana, you know they ask question.
The law provides that the assets must have 10 naira at the final year of the asset. Do you get what I'm saying?
Okay, as the tax sitting down value of it.
Yes.
For the final year.
Yes. All right. So that becomes what you have here. So here now, 2026 year of assessment, did anything happen? Did anything happen? Yes, equipment was disposed. So sales proceeds. How much is that? How much was equipment sold for? It was sold for 50, right? So you have
50,000.
balancing charge also. So you have 50 minus that. So you have 49.99 balancing charge. And that will be all. Are you with me? Are you with me? Okay. So don't
Yes,
25 year of
sir.
assessment now. Now, I will say, since there is disposal of asset, I will write disposal here. What will come in the computation of capital allowance is not the sales proceeds. What will come in the computation of capital allowance is the tax return value of the asset you dispose. The tax return value of the asset you dispose. So in 2025, you dispose motor vehicle, Abi. So the tax return value of the motor vehicle you dispose is what? 37.5. And that's what you will use as the disposed asset. Are you with me?
So if I be to be honest, that point that you write 24.990.01, I still don't get it clearly, please.
The law provides that you should keep 10 naira as the tax return value of the asset. So
Is
the
it
10
for all the
naira
assets?
is yes for all assets. Immediately they get to the final year, you keep 10 naira.
So okay, you now deducted that 10 naira from that 25 to get your annual allowance as 4.99 instead of the normal annual allowance.
Exactly.
Okay.
Sir, please, can I ask a question?
So why
Can
is it
I
that
ask
we
a
didn't
question,
report for
please?
plant and machinery?
Please go ahead.
Please, this question, the disposal, is it full disposal or partial disposal?
The examiner don't tell you if it is full or partial now. We are not doing group here.
So why is it that we didn't keep 10 naira for the plant and machinery for the final bonus?
Why is it what?
For the plant and machinery, we didn't keep 10 naira.
Which plant and machinery did you keep 10 naira? Please mute your mic. Aji Shekola, please mute your mic. Please mute your mics. They are distracting.
Hello, sir.
Yes, please, okay.
Okay, please. There was no general retention fee for plant and machinery at the final. Are you with me, please?
I'm with you, please.
And the retention fee you talked about are the final assets under the computation of balancing adjustment. There was no general retention fee under the school fee and fees, sir.
There's 10 naira here now.
And when you did, now does it 10 naira cover for both assets?
Does it cover for what?
Is it for the both assets?
Which both assets?
Now, if you, the motor van retention fee.
The motor
Yes,
van
there
does
was
not
no.
have retention fee. It was
Okay.
sold before it got to the final year.
Okay. All right, sir.
So here you have another.
Hello, sir.
Hello.
Yes, sir. Please, I want to ask a question regards to this computation of capital allowance.
Yes.
As we move to new method of getting the year of assessment. Now, if a commencement within the year, let's assume that, okay, this is year 20, okay, a company commenced business during the year. Can we prorate the annual allowance?
I didn't get your question.
For instance, now let's assume that a company commenced business September 2023 and make its account to be 31st December.
Yes, you prorate annual allowance.
Okay, for the first year only, Abi.
Yes.
Okay, the balance after the first year, the following year, you're going to continue with the proration or we just
Just
it up
do tax
and divide
nominal
it by
value
the
divided by the number of years of assets. I guess you came late. Tax nominal value divided by the number of years of the assets. The remaining useful life of the asset.
Okay.
Hello, sir.
Okay. Thank you very much.
Sir,
Let me
the one that
continue. Let me continue. I will accommodate questions in the next
no
couple of
problem.
minutes.
No problem.
Please note your questions. I will accommodate questions in the next couple of minutes. Are we here together?
Yes.
There's an asset bought in 2022, right? Hello.
Yes, we are together. Yes.
The asset bought in 2022 has gotten to the final year of the asset. Because you have 2022, 2023, 2024. 2025 is the final year of the asset. For that reason, what you just do is the annual allowance. That's 87.5 minus 10 naira. Do you get what I'm saying? Yeah. The asset, if you notice something, are you with me? If you notice something here, the assets, the tax nominal value of the asset disposed is the same. So what you have here is you don't have the old asset again. Are you with me? For the motor vehicle, you don't have old asset again. What you have is the new asset. So you only repeat the annual allowance of the new asset because they've sold the old asset. Do you get?
Sir, sorry, sir. From our calculation, the year it was disposed, is it that the tax within that value as at that year is 37 naira 50 kobo that you wrote?
37,500. Yes.
Yes. Okay. So now the annual allowance of 25,000 you wrote is just for the new assets.
Exactly.
Okay.
So you have this, you have this, you have this. No. Then finally you have 2026 YOA. All right. So you have, are you with me? Disposal. An asset was disposed, plant and machinery was disposed of 10 naira. That's the tax nominal value of the asset disposed, right? Annual allowance here. The asset purchased in 2006. You ask your question. The asset purchased in 2024 has gotten to the fourth year. So for that reason, you have only 1 year remaining. So you do 24.99. Right. Here too, the asset purchased in 2024 has gotten to the final year. So you just have to maintain 10 naira as the tax nominal value. So you have 124. That's this. Plus 124.99. Please mute your mics. This thing moves ahead. No. So you have TWDV. All right. Excellent. Yeah. 125 minus 124.99. You have this. Are you with me, please?
Yes, sir.
Any question?
Yeah.
That's the end of the question. Any question from your end now? I can accommodate as many questions as possible now.
Sir, please scroll down to that disposal for that 10 naira. I want to check that place well. I think I have a question there.
Okay.
Okay, so that means that 0.01, that 10 naira is the cost of that asset based on the rule that the final year, right?
Exactly. That's the carrying amount. What you used to call carrying amount in FA, in financial accounting.
Okay. So now the annual allowance you charge for that year is the annual allowance, then you take away that 10 naira that we must retain as the tax written down value. So you that's how you got that 24.99, right?
Yes.
Okay. So the same thing is applicable for the other asset that was sold too.
I didn't get that.
So that rule of that 10 naira at the final year, is it for all assets or some specific assets?
The 10 naira is for all assets. The 10 naira is for all assets.
Okay, it's applicable to all assets, Abi?
Yes.
Okay.
There was a place where after we did the balancing,
I'm struggling to hear you. You can use the chat room. I've not picked anything.
Hello. We're doing the computation of balancing and adjustment.
You can use the chat room. I'm not picking what you are saying.
Hello, sir.
Hello, sir.
Sir, please, can you hear me now?
Yes, I can hear you now.
Hello, sir.
Hello, I can hear you. Please go ahead.
All right, sir. Sorry, I joined late. I don't know whether this computation and the question will be available after the lecture, sir.
Yes.
I'm only following.
It will be
How
available.
will I get it, sir?
If you are in the group, you will get it.
All right. No problem, sir. Thank you, sir.
You're welcome, sir.
Hello,
Thank you.
The lady speaking.
Hello, sir.
Hello, ma.
Please, why was this 37,500 for disposal in year 2025? Please, why was it repeated under the other computation of capital allowance we did earlier?
Am I the one struggling to hear you? Is it from my end or your voice? Can you please add more volume?
Okay, can you hear me now, sir?
Better.
All right, thank you. I said, please, this disposal for year 2025, year of assessment, why was it repeated again under the computation of the capital allowance?
Because at this point, the essence of the table on computation of capital allowance is to determine what is the value of assets we have left. So, to get the value of assets you have left, you have to deduct the one you sold from the one you have left to get the new balance. Do you get the gist?
Please recap, sir.
You have to deduct the old balance, the one you sold. If you want to get the value, if you want to get how much is in your store, how much is the value of what you have in your store, all you need to do is deduct the one you sold from what you have in store. You get the balance, Abi?
Yes, sir.
And that's the idea here. So the one I sold is 37.5. So just deduct that to get how much is remaining with me that I've not sold.
Okay. Thanks very much.
You're welcome. Anything.
Okay, sir, please can you show up to 2023 year of assessment? I want to check something.
You have this thing should be your group self.
Okay. Because I was looking at the additions and I discovered that those three figures were not matching over there. The total, the sum total for year 2023, we're having 904. We're having 904. Then that of 2024, deducting that figure from that one in 2023 is not giving us the total expected.
What's total? How did you? What were you expecting to be the total?
No, the 904.
Yes.
The addition. Okay,
Okay,
compared
you
to
mean
the 2024.
this plus this plus this? Is that what you're saying?
Yes, we have that. Then deducting that of
No,
2024.
this capital allowance, you don't mind the colon, you just
Okay.
add up you just mind add up all the allowances to give you the total allowance.
Okay.
What you do is just to add it up. That's all. Add
Okay.
the allowances up. That's all.
Okay.
All right. Another question before we call it a night here.
Okay. Hello, sir.
Sir?
Yes.
Hello, sir. I want to
Akim
ask question
Boboye.
about the yes, Akim Boboye Comfort, sir. I
Okay,
want to
please
ask
go
a
ahead.
question about about the investment allowance. Even though the new finance act has removed it, does it mean if you are given a backdated date for the company, we are not to input the investment allowance too as well?
If you are given what?
If the year given in the question is not up to the year the new finance act took place, does that mean we will not charge the investment allowance?
If it is not within the year the finance act takes place, please charge investment allowance. Investment allowance became effective in 20 years. Investment allowance became
So in
effective in 2024
2024,
year of assessment. 2024 year of assessment.
January. Okay, 2024 year of assessment. Okay, thank you, sir. Thank you. Bye.
Any other question? All right. In the absence of question or questions, any question? In the absence